This is the 10 Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 255 is brought to us by Blueberry Markets. I have been trading for 15 years now, and there have been a strong handful of times where I have needed customer service from my broker, and it has not been the best experience. Now, I'm American, so I cannot trade with Blueberry Markets, but man, have I wanted to many times. Not only can you do everything there and trade everything there on any platform you want, but you will get the world's best customer service, and if you click my link, you will get some great bonuses along with your own personal customer service concierge should you need anything at all. That's what they've always done for the people who click my link, and you can find that link in the Blueberry Markets blog down below in the show notes. Click the link, scroll to the bottom of that blog, and you will see the link you need to get yourself set up for life with the best broker in the world. This is the 10 Minute Contrarian Podcast, and a quick note for anybody who is a Forex trader who saw the title of this podcast episode and came over thinking this is going to be about trading. Just know this is not. This is my investing podcast. There are concepts from trading which carry over here, and there are many that don't. And so this podcast episode will not help you in your trading journey. I know you like to go deep in the big banks rabbit hole and see everything associated with it, and I think that's great. You should, but this is not necessarily going to be for you. However, if you are interested in investing, we do take the same contrarian approach here that I do to my trading. So if you want to subscribe and learn how we do things here, feel free. But I did want to get that part out of the way because my FX traders are going to see big banks and they're probably going to click and see what's going on. And I just want to get that part out of the way. But moving on, the Clarity Act, which is the main crypto bill in the United States going through due process right now, has just been passed and moved on to the Senate. It has not passed all the way. The whole point of this Clarity Act is to do what we should have done a long time ago and have an actual set of rules to follow of what the future of finance, which is blockchain, can and or cannot do. Because back when bridge troll Gary Gensler was the head of the SEC, he was bought and paid for by the banks and made everything purposely unclear and obfuscated every rule that a crypto company would need to follow. And so instead of being able to follow the rules, there simply weren't any, which gave the SEC the green light to put any budding crypto company that may be a threat to banks under investigation. Yes, very third world stuff going on in the United States at the time. Still is, which we'll talk about. And it was very obvious to everybody, but what can you do? The big banks have this much of a stranglehold over things still. They understand that crypto and the blockchain is the biggest existential threat they have ever faced in their entire history. They have had a completely uncontested run ever since their existence, really. And now, for the first time, a much better way to do things has been introduced. They see the writing on the wall, and they are fighting for their lives. Now, as far as the Clarity Act goes, there is a very small chance it is going to get passed by the Senate, mainly because Democrats will not vote on it unless there is an ethics clause added on saying that President Donald Trump and his family can no longer exploit and benefit crypto for their own personal gain, which they have certainly tried to do up to this point. And might I say, the Trump family has made an absolute mockery out of all this up to this point. So I wouldn't be too upset if something like this, an amendment like this, came into play. But the bill, as it stands in its current form, is still a cause for much panic in the banking system, because the most bought and paid for politician in the United States, walking cartoon character Elizabeth Warren, senator out of Massachusetts, who the people of Massachusetts just continue to vote in, that's why she's even relevant, should tell you everything you need to know about that state. But she has become a gigantic meme over the last 5 years for being obviously bought and paid for by the banks, She also has brought up hundreds of bills to be voted on, and almost none of them have gone through. Like it's disproportionately hilarious if you look at the numbers. And she also claimed she was 1/16th Native American, and turns out she is 0% Native American, which prompted all of Twitter and the president to call her Pocahontas, which is a level of shaming I think we need to see more of. She was also a part of the, quote, anti-crypto army, which I think was her and literally 5 other people at this point, because nobody in Congress wants to be known as that. Everybody in Congress in the United States has either, well, with the exception of a very few amount of people, either have a positive stance on crypto or a neutral stance on crypto. It would be very strange to completely be against something this beneficial. And the only reason anybody ever would be if they are, bought and paid for by the banks, of course, or simply looking to screw over Donald Trump because of the way he and his family have integrated themselves into this. But everybody knows they're going to be on the wrong side of history here. It's just how much money do they get to make from bank lobbyists in the meantime? Because at first, it wasn't really so much a plan to shut down crypto. Because we say it all the time here on the podcast. You cannot stop technology. You can only slow it down. And that's what they were trying to do. They were trying to catch up. They're trying to get their own products in place so people will use their products, which are more familiar because people are more familiar with banks, than the actual blockchain products themselves. And early on, because of the FTX debacle and everything else, they succeeded. And they are trying to do that again here. But I think it's more than that here. This bill is extremely important, and I don't think most people understand. Most big banks, most banks in general in the United States and overseas, they give you next to nothing for having your money deposited with their bank. And to add insult to injury, they take your money and lend it out at often a rate of 10-to-1 or higher to other people, which is not sound banking practice. So the moment you deposit money into an account, they dilute it at a 10-to-1 ratio and give it to other people. So whenever you hear people say, as soon as you deposit your money into a bank, it's no longer yours, well, they're technically right. And now the trend lately has been debanking for very silly reasons, often just political reasons. And, it's especially in places like Australia. I told you, Aussies, watch out. These banks, if you simply want to take out $1,000 worth of currency and convert it into cash, they're going to ask you what you're doing with it and why you want to pull it out. Your own money is now all of a sudden their business. And this has even happened in the U.S. Now, if the banking system was perfect and functional and solvent across the board, they would never, ever need to do this to you. They certainly didn't before. But things have gotten bad, and they know, as of right now, this is your only choice, at least for most people, and they are taking advantage of that in a very bad way. I don't think this is the wisest thing to do, especially when you have competition like this coming, but here we are. Now, I tweeted out yesterday something Elizabeth Warren said this week, and she did it in her normal, overly animated, theatrical, tears of a clown fashion. Let me pull it up here. And it was in regards to the Clarity Act. And she said, when this blows up the economy, I hope everybody remembers, and then she got drowned out. And everybody on X had a good laugh at it. And I said, hey, what if I told you she actually has a point this time? It's so easy these days to dismiss people like Elizabeth Warren. But at the same time, if you blow up the banking system, which a bill like this will not do overnight, it will take time. But even though this transition to the blockchain will be a positive one, remember too, what we always say here as well, transitions are very bloody. You can't just blow up the banking system. Unfortunately, it's just too important. Stop for a moment and take a look at everything around you, especially if you're indoors. Do you see all those things? Yeah, banks are responsible indirectly for everything you're looking at right now. Companies need banks to operate. They need loans. They need liquidity. And that's where it comes from. This is why back in 2008, during the great financial crisis, when the banks got bailed out, a lot of people were upset about it, and morally they should be. But you just simply could not let all the big ones fail like that. You had to let the extremely insolvent ones fail, and then allow the smaller ones to get gobbled up by the bigger ones, thus making the bigger ones even more powerful than they were before. Again, totally sucks, but the alternative would have been worse. And that's one of the points I want to get across in this episode. The thing that will make people happy morally compared to the consequences of doing it that way. So blockchain is much, much more for the people. It benefits them in a much bigger way than being with a bank ever would. You actually get real interest on your fiat currency, which, as we all know, we need desperately right now. And in many ways, a blockchain is going to give you that far more than a bank ever would, but also more than most bonds ever would as well. So you have another part of the economy in huge, huge jeopardy here long term, because banks nor bonds will ever be able to compete, because of the way they're structured, with what having your fiat currency on the blockchain can give you, because of the superior way which it is structured. So this will not happen right away, but we're already seeing it with the younger generations. A higher and higher percentage of these younger generations, the younger they get, are more interested in having their money on the blockchain than an actual bank. So if over time everybody decides to have their money on the blockchain instead of a bank, and just decides to do their banking that way and get much more yield, not just with their fiat, but with actual products, which we'll talk about in a moment. Banks, for the first time in many centuries, actually have a real threat to their entire existence, because they simply cannot compete. The best they can do is this whole if you can't beat them, join them type of strategy, to where they have their own products which can kind of compete, but they're going to need a lot of time to implement those and get them in place. And then, to really make matters worse, along comes this whole digital asset treasury idea, where you have products to where the price of them barely moves. So in the bond fund world, think something like SGOV, to where it hardly ever moves at all. It moves in an extremely tight, consistent range, but you're just there to get the yield, which is about 4% right now. Yet they, through a superior instrument known as Bitcoin, are able to give you anywhere from 11% with STRC to 13% with SATA. Now, what will the future hold for these digital asset treasuries? We don't know yet. But if you're a large bank, you're looking at this and saying, if this does happen, we will not be able to compete on any level. Maybe on credit cards, but those will probably go the way of the dodo as well. So that's what's going on out there. And as contrarians, as people who are in the middle of the most interesting era in financial history right now, we need to be aware of what's going on here, not on a day-to-day basis, but overall. And this is certainly not nothing. This is really a big deal. A much bigger deal than financial mainstream media wants you to think it is. I mean, how could it not be? Based on what I just told you. People just don't understand the magnitude of this. I certainly don't think they understand the magnitude of what these digital asset treasuries could end up doing. I say could. It's still early, and the yields are stupid high, to the point to where almost nobody wants to believe in them. But as we said, you cannot stop superior technology. It will always win in the end. So you have to decide, dear contrarian, dear investor, do you want in on this, and in what way? So we will now pivot over to the solutions portion of episode 255. Now, in terms of big bank stocks, I am not completely bearish here. I am just taking a very dedicated sit and wait approach here. I am monitoring this about as closely as you can as a long-term investor, because I don't think they're dead here. I think there could actually be some great value coming up here with stocks that just do nothing. I mean, look at these charts for some of these banks. Do nothing but go up and to the right over time. They are great long-term, sometimes forever, buy and hold stocks. And in the banking sector, you have companies like JP Morgan, ticker symbol JPM, who are just eating the world little by little. And there is real concern with regional banks in the U.S., how insolvent and how tenuous their situation is. And if they ever go under, guess who's going to be the first one in line to gobble them up? Say what you want about the ethics and the morality of something like this, but that is a stock you certainly will want to hold. My favorite banking stock in all of the world is Royal Bank of Canada, ticker symbol RY. You talk about a performance and a dividend beast of a stock. I probably couldn't name you one better. And like we said before, if this transition does come to fruition, it's not going to happen right away. Like, these banks are still going to have a really, really nice run before things really start getting dicey for them. What they're doing now is more protecting their future for the next 20, 30 years. Not so much the next 3 to 5 or even 5 to 10. So oftentimes you can buy and hold these things, and while you're buying and holding, you can continue to watch this situation unfold and then decide what to do from there. Now, moving on to the blockchain, do not ever be dissuaded by Bitcoin maxis. You have Tyler from Nebraska saying that there's only one choice, and that is Bitcoin, and everything else is a shitcoin, and it's going to zero. Well, as I always say, these people have lost that argument 5 years ago. It's over. They've lost. Blockchain is a superior way to do banking. It is a superior way to do payments. It goes hand in glove with AI. And I would love any maxi to walk me through exactly how all of these tokens are going to zero, given what we just laid out. Is the Bitcoin blockchain going to replace all of this? I mean, granted, as blockchain token holders, we're already frustrated with how slow this transition has been. Well, the Bitcoin blockchain is even slower to develop. So no, blockchain companies are going to play a large part. They already have played a large part. And I will side with all of the large banks and financial institutions of the United States and pretty soon the world over what Tyler from Nebraska thinks. I really, really like my chances here. I've also already done episodes talking about all the blockchain partnerships a lot of these institutions already have and how large corporations already have them to boot. But that situation continues to develop and grow, so always stay on top of that. And I had an episode not long ago called Generational Crypto Companies, which is already aging beautifully, and I knew it would. And there is still such crazy, crazy opportunity to get in cheap right now. You will have to deal with the headaches of slow development. And you're wondering, why are these things not going up and to the right like they should be? But that is the price of getting in early. It is absolutely going to reward the long-term buy and holders, which I will remind you is not many of us. Your average crypto token holder certainly does not have the patience to wait something like this out. So if we can be the few people who actually do, the light at the end of this tunnel is extremely, blindingly bright. Now, I do also want to mention again digital asset treasuries. These have obviously gotten a bit of ire from the investing public because the main reason why this is because the yields are so high. Again, for something that doesn't even move up and down that much. That is an asset class that is so rare, and they will only give you a very limited amount of yield most of the time. And now along comes something that is giving you 2 to 3 times that yield. Of course, it's going to get attacked on every angle. And of course, it's going to be very slow for institutions to come in because can you just imagine the PR nightmare? Your career would be over. As they say, you'll never work in this town again. If you blow up your client's account by chasing a 12% yield, you would get laughed at for a decade for doing something like that if it blows up and doesn't work. And that's the big fear here. People got laughed at for BlockFi, which was 7%. They're like, can you believe chasing 7% yield? What a dumbass. Of course that wasn't going to work. Why did anybody put this guy in charge of other people's money? It completely goes against his fiduciary responsibilities to his clients. And now you have these things promising anywhere from 11 to 13 right now. Of course they're going to get debated. Of course they're going to get looked down on by institutions. And of course, the companies behind these digital asset treasuries, mainly MicroStrategy at this point, are going to get scrutinized left and right. Because again, I don't think anybody listening to the sound of my voice right now understands just how disruptive something like this will be should it actually work. And so far, even despite the wild price swings of Bitcoin, especially to the downside over the last 12 months, these things have withstood. Despite what you think about them, you got to give them that. The one major thing that everybody fears, what if the price of Bitcoin goes down a lot? What will happen to these things? Well, so far, round one absolutely goes to the digital asset treasury companies. It was a 10-8 round, 10-7 maybe. Now, again, we don't know what the future of some of these companies will be, but overall, we know what the future of finance is going to be. And these old, stodgy institutions who over time have started to do nothing in your best interest and everything in theirs at your expense are going to have one of two paths: adjust or die. And if you're paying attention and you're executing, you can and will profit tremendously off of this unprecedented historical change in the way money and finance is done. I'm going to say it one more time. Nobody, including most of you, understand the magnitude of what is going on during this period of time, which we are all fortunate enough to be a part of as investors. As citizens of the world, it's a bit rough, I know. But as is always the case, investors will profit from this. And the ones who are crazy enough, yet early enough, will profit the most.